Do you want to get paid upfront to name the price for the stock that you're interested in buying at a discount? And if the price doesn't hit, if the stock doesn't go down to the price that you're willing to pay, you still get to keep the cash. And if it does go down and you buy the stock at a discount, you still get to keep the cash that you got paid up front. Yeah, so in today's video, that's exactly what I'm about to show you. It's called selling a cash secured put. That's when you make a promise to say, hey, if this stock drops to this particular price, only then will I buy this stock, but pay me right now for making that promise to you, okay? And I'm going to show you step by step of everything that I look at when I do this. And I do this every month to generate passive income while I'm waiting to buy stocks at the price that I'm looking for, and they pay me upfront for this. And I will actually execute the trade live here in this video as well, so you see exactly the step-by-step how to execute a cash secured put, all right? So get ready to take some notes. Let's get this going. I've been looking at American Airlines for a while. It's dropped down quite a bit, and recently it was at a little over $13, and then, earnings came out, it missed, it went down, all of that stuff. And right now it's trading at right around $11.24. It's a great price for the stock, in my opinion. And again, none of this stuff is financial advice. It's all for informational and educational purposes only. And so, but it's at $11.24. So, most people would be like, hey, it's a great price. Let me just go place an order, buy 100 shares right now, and that'll only be like $1,100, right? Great. But there's a smarter way to do this. I don't want to pay $11.24. I want to pay $10 because there's support right here with $1 billion, a little over $1 billion worth of orders sitting at this order block right here, which is the support. And with that, if it breaks that, I don't mind owning it at $10. I'd love to own it at $10. Getting American Airlines at that price, great. But if I make that promise that I'm going to buy 100 shares at $10, which would require $1,000 in capital, right? I want to get paid for it. But if it doesn't drop to $10, I still get to keep the cash that you're about to pay me up front. That's exactly what a cash secured put is. So a couple of things that I look at. Number one, where's the price action right now? Where the support is. And also I look at these, and I'll show you exactly what I mean by this. So number one, I use the Lux Algo Premium indicators to give me all of this data, because if I didn't have this is what my chart would look like, okay? Not a lot of info. So I use Lux Algo. It gives me all the data that I need. If you guys are interested in checking out Lux Algo, I've got a link to it in the description below. So check it out. You can try it risk-free. Amazing software. I've been using it for many, many, many years. Okay, great indicator. This is what's called a bullish order block, which means that there are orders, buy orders sitting here, because what a lot of people will do is when they're interested in buying a stock at a certain price, but they want it to dip, what they'll do is, okay, if the stock is at $11.25 and I want to buy it at $10, they will place a limit order at $10. And if it hits that price ever, it auto executes and they buy the stock at that price. Okay. So right now, the level that it's showing this at is $10.50. So it says, so this data tells me there's over $1 billion worth of orders sitting at $10.50 as buy orders. So there's a lot of people that want to buy American Airlines stock at $10.50 a share. So usually when that happens, price bounces off of those levels, okay? Because that becomes a support, that becomes a resistance. Because this shows that there's $340 million worth of sell orders at $12 and right around 70 cents, okay? So since it's down here, I don't even want to pay that much. I want to pay $10 because if it breaks through that, it gives me additional cushion, because the next bullish order block for $374 million worth of orders is sitting at $950. So this way, if it was to go down to 10, I buy it at 10. And if it bounces back off of the $950 range, I'm still good. This is all about risk versus reward. I like to do strategies that are low risk and that generate income. So this is what that means. Now, the second thing that I look at is the money flow and what the Lux Algo oscillator is telling me here. So this green right here, right? This is the money flow. So the money flow has been increasing, and what that means is there's more people buying than selling American Airlines shares. So there's more money coming into the stock, which is a good sign. It's very bullish. And when I look at the oscillator right here, it's about it's very, very close to going oversold. What happens when something goes oversold? People start buying it. When it goes overbought, it starts going down. The stock market is ebbs and flows, right? So again, if this continues to dip more, I'm happy to buy it at $10, right? And if it doesn't, I still get to keep the cash that I'm about to collect up front for the premium for that promise that I'm making that I will buy 100 shares of American Airlines at $10 a share. So that's the first thing that I look at. I look at the chart, see what the technicals are. And then the other thing, of course, the Lux Algo, and I'll show you the settings that I use. The setting that I have on here right now is a contrarian mode. So it picks the reversals. Okay, with the contrarian mode right here in signals and overlays, it picks contrarians and exits. So last couple of times, it's been pretty accurate, right? It said, hey, it might reverse. It did. Here it says it might reverse. It did. So, that's just additional confirmation for me, gives me a little bit of peace of mind. The next thing that I look at is I go into Market Chameleon, and this is where I do the fundamental analysis. So type in AAL, American Airlines, brings this up. I go into the fundamentals, and I go into fair value, because I want to see the fair value of the stock and for the company. So now the implied value for American Airlines is around $13.10. And this is a valuation period. That's a 3-year average period. The market price right now is around $11.25, which is a 14.1% discount. So when I'm selling cash secure puts, I want to make sure that the stock is also selling at a discount, because if I'm even buying it cheaper than this, right? Guess what? That means I'm getting a very good value for my money. So even if I get assigned, I don't mind holding it, because I bought it at a discount, number one, by collecting premium, and number two, because the stock is already selling at a discount, even at its current market price. So I want that additional value to be there if I end up holding it long term, because what I'm going to do is, if the cash secure put gets assigned, I'm going to start selling covered calls against it to generate more income while I'm holding the shares. But if it really goes down a lot and I end up holding the shares for a little bit longer than expected, I still got a good price, which gives me that peace of mind that, hey, I'm still good. It's okay that I ended up buying these shares because I wanted them to buy it at a discount, and they were already selling at a discount anyway. So that's the other thing that I look at, is the fundamentals of the fair value of that stock. Now, let's get into how do I actually do this. What I like to look at is the delta. So how do you sell a cash secure put? How do you pick the expiration and strike price, right? That's usually the next question that comes up from a lot of my students, is what's the optimal strike price and optimal expiration date when you're selling a cash secure put? So my baseline is I like to sell cash secure puts with a 20 to 30 delta. And what that delta means is if it's at 20 delta, that means there's an 80% chance that it will expire out of the money and I'll get to keep the premium. I won't get assigned. If it's a 30 delta, that means that there's a 70% chance. You see, 70 plus 30 equals 100, right? So there's a 70% chance that it'll expire out of the money and I'll get to keep the premium. So there's a 30% chance that it'll go down to that point where I'll get assigned. So I like to play it a little bit safer than most, because I just want to generate income, because the money that I put aside, and this is a bonus tip, okay? The money that I keep aside for these cash secured puts, in case if I was to get assigned on the shares and I end up buying the shares, I park it in my Schwab account in SWVXX, which actually pays 4.1% annual interest while the money's sitting there. So not only am I collecting the interest, I'm selling puts to collect premium. So it's like a double income strategy. Okay? So bonus tip. Hope you guys like it. And if you guys did, hit that like button and make sure you subscribe and follow. Okay? So how do you do this? So this is in Robinhood. I'm actually going to execute the trade in Schwab, so you guys will get to check out both platforms. Okay? So here, trade American Airlines options. I like to go out 30 to 45 days. Okay? And 45 days right now, 46 days is looking at September 16th. Options for American Airlines, they have weeklies as well. Okay? But the premium's not that great. For if I wanted to do this at $10, right? And if I sold put, sell, if it was expiring in 4 days, I wouldn't make any money. There's no premium at $10. Even if I went out 11 days at $10, I'm collecting $2 per contract, tying up $1,000 for $2. I don't think that's worth it. Okay. So I'm going to go out 46 days, and monthly options usually have a lot more volume than weekly options. So check this out, and I'll show you an example of that over here as well. So $10, the open interest is 59,000 contracts. Volume today is 159 contracts. If I even just go down 1 week. So if I go, because this would be considered a weekly option, because monthly options expire on the third Friday of each month. And the third Friday would be September 19th, right? 1, 2, third week. Now, if I do the same $10 contract for September 12th, which is 39 days, the open interest is only 272 contracts. You see the difference between the weekly and the monthly, right? Huge difference. So this is what I would do. Put, sell. When I click on $10, it shows me the delta. I like to do between 20 and 30 delta. So $10 is at 20 delta right here. If I was to do $11, the delta is 39. That's a lot. So that means that there's only a 60% chance that I wouldn't get assigned. There's a 40% chance I will get assigned. Yeah, there's more premium, but I'm okay. I'd rather do the 10. I want more of a discount because at $10, let's pull up the calculator. American Airlines right now is selling at $11.26. So if I buy it at 10, that's $1.26 cheaper than what it's currently at right now. So divided by 11.26, that's an additional 11.19% discount than what it's trading at right now. I'd love to buy it at that price because even right now it's selling at 14% discount. So if I was to get it then, that's 25% lower than what the implied values of a stock. That is good value for me, okay? I'm happy with that. And for that, I collect $23 for every 100 shares. So for $1,000, I'd collect $23. Now you're going to be like, hey, that's really not a lot of money, right? So 23 divided by $1,000 because each contract is for 100 shares. So 23 cents times 100 is $23. $10 per share times 100 is $1,000. Now, that in a little over a month is still a 2.3% return, okay? You do that 10 times, that's a 23% return, right? So it's about low risk consistency that builds bankrolls, that builds portfolios, that builds accounts. It's not the high risk trades. So this is what I specialize in. This is what I do to generate income. And this is what I teach my students in my Patreon account. I've got a link to it in the description below too if you guys want to see all the trades that I'm actually making, get checklists and a lot of education and our private chat and all of that stuff. So now put, sell, click on this. It's going to tell you, hey, you're collecting $23 no matter if American Airlines goes up, down, sideways, whatever it is. You start only taking a loss if it goes really, really down. But it's really not a loss because if you're willing to buy American Airlines right now at $11.26, right, and if you're going to hold it, then this doesn't really matter because if you bought it right now, you'd be losing a lot more than what you're going to lose if you sell the put. Number two, when it says max loss of $977, this is where people freak out, okay, that, oh man, I'm only making $23, but I'm risking I could lose $977. Okay, so let's get real. Do you know when you lose that $977? If American Airlines, which is one of the biggest airline companies in the US, goes completely bankrupt within the next 46 days, that is when you lose the entire $977. That's when the American Airlines stock goes to zero before the expiration date. That is when you would experience this max loss of $977. So before you start kind of panicking about that stuff, this is what that means, okay? And hey, if you were to buy it right now at $11.26, and if it was to go to zero, you'd lose $1,126. By selling that cash secured put, right? Let's go back to that. By selling that cash secured put, you're losing $977 instead of $1,126 if American Airlines was to go bankrupt in the next 46 days. So that's what that means. Now, do I believe in this? Is this what I'm doing? Let me show you how to do this in Schwab, and I'm actually going to execute this because I do want to make this trade. So in Schwab, I'm going to go here. I'm going to go into AAL, American Airlines. There we go. And go into options. Now it's going to let me select my strike, expiration date, all that stuff. I just want to do puts. I'm going to close this out. I want to go out 46 days. See, these are all weeklies. This is a monthly because August 15th is the third Friday of August. September 19th, 46 days out. I'm going to do the $10, right? And I'm gonna do this in my retirement account so I can collect this premium without having to worry about taxes on the premium that I'm collecting. And I've got money already parked in SWVXX over here, so I'm collecting interest on it when I do this. So double income, let's go. So now I'm gonna do mid price. I actually want, instead of 100 shares of American Airlines, I want 2,000 shares, okay? So I'm gonna do 20 contracts because each contract is for 100 shares. So 20 contracts will be 2,000 shares. So now the mid price is 24 cents. I'm going to do a limit, make sure all this stuff is checked. Yep, it's in my retirement account. I've got 20 contracts. Sell to open is what you're going to do because you're selling the put, right? So I'm going to sell the put, so sell to open. And if I was to buy it back, then I would do buy to close. But right now I'm going to do sell to open. Here's my expiration date, which is September 19th, 2025 at the $10 strike price because I'm willing to buy it at $10. And I'd like to collect 24 cents per contract, which is 24 cents per share. So times 100, it's $24 per contract. So since I'm doing 20 contracts, that's $480 I'll collect right now. Let's go ahead and place the order. And let's see if it executed. Yep, filled. And there we go. Filled. Order type, 20 contracts. I got it. Yay. So I just collected $480 into that account. Now I can go into account, transaction history. If I go into simplified, my SEP IRA account, right? Today's August 4th. Sell to open did this. And after fees and commissions, yep, I just got paid $466 just to wait to see if American Airlines is going to drop another 12% so I can buy this at a discount. And if it doesn't go to $10, I get to keep this money. If it does go below $10, I'm obligated to buy 2,000 shares of American Airlines at $10 a share, which is a discount from what I wanted to pay today anyway. And on top of that, I still get to keep this money. So guess what? This is where I can show this to you guys in Robinhood as well. So because of the premium that you collect, okay, your actual cost basis, it's not even $10 because you collected 24 cents a share. So your cost basis is actually $9.75. So you're even buying it cheaper than $10 because of the premium you get to collect and you get to keep, which lowers your cost basis. So then when I look over here at American Airlines company, even though the strike price is $10, my cost basis brings it all the way down here. So if I can buy it, if my total cost is $9.75, to me, that's a great value. And this is how a lot of traders, a lot of investors make money to name the price of the stock that they're willing to purchase. I never buy stocks outright unless if there's a particular strategy that I'm using. But when I'm looking to buy stocks for my portfolio, I always sell cash secured puts because I just want a deal. And if I'm not going to get a deal, hey, just pay me cash and I'll put that money aside to buy the shares, but I get paid up front for that kind of stuff. And this is how passive income is generated without having to actually own stock. So yeah, if you guys like this stuff, make sure you subscribe. I've got a lot more tutorials on my YouTube channel, on my TikTok, if you guys want to follow me there as well. And then let me show you guys this. So I've got a link to the description below for my Patreon. It's a monthly membership where you guys can join the community. It's super low. I've kept it very cheap so everyone can learn. This is where I post my entry and exits for every single trade that I make. We have a great community chat, and this is where these are the kind of results we're getting. Like this was just last week's trades that I closed, right? Palantir call, $1,100 profit. Meta, $1,000 profit. Microsoft, $455. CVS, $2,700. Amazon, $729, right? You see all of these? All the screenshots are there. If you guys want to join the free membership, you can even see when I got in, right? You won't see the actual post because you got to pay to be able to see it live, but you'll see the track record. It's all posted, all super transparent. I did have 2 losses last week, $56 and $84. So yeah, it was still a super solid week with all of these wins and such small losses. So if you guys want to learn and figure out how this stuff is actually done, because options trading is one of the best ways to generate solid, consistent income, which is low risk. It is not as risky as people think, but of course there's always some risk, right? So if you guys like this video, make sure you hit that subscribe button, click the bell so you get notified, and if you're watching this on another platform, make sure you follow, like, comment, and share. I'll see you on the next one.